Hey guys, Antoine Martel here, and in this video, I'm going to share with you how to invest in real estate on the blockchain. Yes, I just said real estate, and I just said blockchain. And no, this isn't NFTs and this isn't virtual real estate. This is real assets in the real world that you can buy through the blockchain. And this is brand new. There's a few companies out there right now, and we just started one ourselves, where you can actually buy real cash flowing assets on the blockchain through your phone. So with any new tech that comes about, there's obviously pros and cons and risks and things you should know about. The whole population of the entire world is going through this learning process of what the blockchain is, how does it work, how do people use it. So in this video, I'm gonna break that down, and then I'm gonna give you guys a couple of different companies that you should check out to go invest in real assets on the blockchain. And we're going to talk a little bit about virtual real estate too. But before we get into the video, please like and subscribe to my channel, because every single week I'm going to be posting new and updated content about real estate, the blockchain, and I want you guys to have practical advice to go out there and start investing in real estate, whether it's in the real world or through the blockchain. And I want you guys to be prepared to invest in this now before it goes to the moon. So first off, before we get into the video, I want to share with you guys what the hell the blockchain is. A lot of people get confused with the blockchain and cryptocurrencies and NFTs, and a lot of people think it's all the same thing, but it's not. The blockchain is the backbone of all of this cryptocurrency, NFT, tokenization of everything. So the blockchain is actually a digital ledger. And the great thing about it is that it's completely public. So all transactions that occur on the blockchain or through the blockchain are recorded on the blockchain for everybody to see publicly. You can actually go and buy a token on somebody's website, then go to that blockchain, the Polygon blockchain, Ethereum blockchain, Bitcoin blockchain, and actually see that transaction live, and everybody else can see it too. The blockchain also has several security features to make sure that every single transaction on the blockchain is secure. So the way that it works is that there's thousands and thousands of computers around the world doing the algorithms that go on the blockchain. So every single time that a transaction is made on the blockchain, there are thousands of computers around the world double checking everything to put that transaction hash on the blockchain forever. That's the other thing. The blockchain is public, but it's also forever. You can't go and adjust or change or click edit on a blockchain transaction. So every single time a transaction happens on the blockchain, it's there forever. Now, in order to hack the blockchain or hack a transaction or edit a transaction, you would have to go and con thousands and thousands of computers against your one lousy computer. So good luck. And because of all this security and how easy it is to use technology on the blockchain, I think that the future of real estate is going to live purely on the blockchain. So all these different title companies will now be extinct. All of those title companies will now just be sitting on the blockchain. If we can get government approval, you won't have closing costs, there will be no delay, you won't have to deal with bank transfers or wire fees or anything like that. But we're not there yet, and we have a long way to go. But right now, there are a few companies that are leveraging the blockchain technology into real estate as an asset class today. So these few companies are the early adopters, the first people into the market space. They're going to be shaping the real estate on the blockchain for the next 10 or 20 years. So in simple terms, they're taking real estate assets, they're taking a house, they're splitting it into 10 different pieces, 100 different pieces, selling those pieces off, and those people that buy those pieces or buy those tokens are now owners of that real estate. They just own a really small percentage. And they still get all the benefits. The appreciation, the tax advantages, and the cash flow, all the benefits of owning that real estate in the real world, they're getting that through a token. Now, there's some companies out there that are doing things legally, some are doing it in a gray area, and some are doing it flat out illegally. And there's some projects that are just plain silly. And you may have heard of the government or the SEC stepping into a lot of these projects that are doing things completely illegally. And there's certain projects that I've heard about where people were selling like a polar bear NFT, and they were saying, if you buy and hold this polar bear NFT, we'll give you a token every single day, and that token is worth $15. And that's a security. When you promise a return to somebody, that is now a security, and you need to file that with the SEC. They would have to go and get SEC approval to sell these polar bear NFTs to people in the US. But they're not, because they're based in other countries, and they're kind of like, see you later, come try to track down our wallet address that's located in, some different company in Europe or Africa or Asia. But be prepared, because these projects will get shut down. And the SEC will actually go back until the day that you started and either tax you or fine you, because everything is public. So the SEC can go, once they learn about the blockchain, once they have blockchain investigators, they're going to go through the blockchain and see the public records of everything that project has done since inception. And they're going to really start cracking down once the SEC gets up to speed. So for you, when you're investing in a blockchain project, make sure they're doing things the right way. Make sure they're doing things legally. Don't invest in projects that are doing things in a gray area or doing projects in a completely illegal space. Because I'm worried that when the SEC does get involved, they're going to just rip all the tokens from the blockchain, and all that that hard-earned money that you invested in that project will just disappear in thin air. And a lot of these projects that are just plain silly, in my opinion, are virtual real estate projects. And virtual real estate projects are when people go and buy virtual land or virtual houses in these different metaverses. But the problem with this is that anybody with $1 million or $2 million can go and create their own metaverse and start selling land in their own world that they created. So why the hell would you spend 100 grand or 50 grand or even $5,000 on a virtual piece of land when it's infinite? The great thing about investing in real estate in the real world is that there's just one earth. There's not 50 different earths that you can invest in, right? So there's intrinsic value of land that sits on earth. But in the metaverse, it could all be cloned and recreated, and there could be thousands and thousands of different worlds out there. So how can you say that a certain piece of land in virtual real estate has any kind of intrinsic value? So if you want to go and buy an Eiffel Tower in the metaverse, you'll own one of 500,000 Eiffel Towers, right? You can't own the one and only Eiffel Tower. So I wouldn't really be looking too much into the virtual real estate projects. I would probably stay away from those projects, and I have personally. I would more look at people that are taking real assets, that are doing things legally, and putting those on the blockchain for you to invest in and buy. So what you'll notice when you start researching these real estate tokenization projects is that a lot of them are taking one house, splitting them up into 100 tokens and selling them to you to buy. And you just buy one token of one house, you own a percentage of one house. Now this sounds great on paper. You get to own a percentage of one little house, you get to review the financials, make sure the thing's cash flowing, make sure the tenant looks good, all those kinds of things. But in reality, you really want to hedge your money into millions and millions of houses if you could, right? But the power of the blockchain is that now you actually can. But a lot of these projects out there, a lot of these companies out there doing blockchain with real estate are not doing that. It's essentially like buying an Apple stock for one Apple store. No, you don't want to do that. You want to buy Apple stock and get a piece of the entire pie. Wouldn't it be great if you could invest a little bit of money into 1,000 houses? It would make your cash flow way more stable, appreciation way more stable, your vacancy and occupancy way more stable. Because think about it. If you have one house and the tenant leaves, you're making zero income for that house until that tenant gets back in place. But if you had 1,000 houses and a tenant leaves, it doesn't even matter. You hardly will even notice it. Maybe you'll make a penny less that month because you have 1,000 different houses. So that's one of the great things about the biggest real estate investors out there. They're able to own 10,000 houses or 10,000 units of apartments. They're able to hedge their bets and split up their risk among 10,000 units. And that's one of the benefits of only the really, really wealthy people in America that get to invest in real estate. So why aren't these projects taking advantage of that and allowing beginner investors to invest in 10,000 units versus just one or two houses? That's the worst thing about starting off in real estate, is that you have to buy one house at a time. It's very slow. It takes $20,000 to $40,000 to buy a house. You have to save up more money to buy another, to buy another, to buy another. But there should be a project out there that gives you that benefit of the really, really ultra wealthy real estate investors in America. Now, some of the leading companies in this space are Landshare.io, Vave.io, Realty.com. But all three of these companies are doing the exact same thing. They're taking one real estate asset, tokenizing it, and selling you the tokens. And I'm not endorsing to invest in these companies. I don't even know their SEC approval, if they're legal or if they're not legal or anything like that. But I think all of them are not doing it the right way. None of these companies came from real estate first and then added tokenization into their real estate business. But that's where we're a little bit different. Because of all the problems in the space, we decided to create our own real estate tokenized fund, which is called Martel Invest, where we sell Martel Invest tokens. And our fund works a little bit differently than the competition. The reason why is because when you buy one of our tokens, you don't get a percentage ownership of just one house. You get a percentage of ownership of hundreds of houses across America. So for everything that we talked about in this video, our project meets all the criteria. Right, so we're SEC approved, and we're also doing a pool of houses versus just one sole house that you get to invest in. And the SEC approval means that we're completely above the board and completely legal. So that means when you invest in our project, when you invest alongside us, when the SEC does come start cracking down on different companies, our project is going to be fine. Our project will not be affected at all, where other companies where you invest in may be shut down. And we've tried to make our tokenization project really, really easy and simple for everybody to use. Even if you've never invested in the blockchain or in crypto projects before, our project is going to be super, super simple, where you can literally go to our website, swipe a credit card to buy a token, and now you own a tiny, tiny little piece of hundreds and hundreds and hundreds of houses across America. And with that piece, you get appreciation, you get monthly cash flow sent to your digital wallet, and you also get us as the professional advisors of this entire fund and entire pool of houses. So no longer are you investing in a project or investing in a token and just hoping and praying that the property appreciates and cash flows, and there's nobody really managing or maintaining those properties. The benefit of investing in our project is we're going to be actively managing and maintaining all the properties in the portfolio to make sure we're making an amazing return for the long run. And we're real estate people. We came from the real estate business and started to add tokenization into our business. So whether you invest in the Martel Invest token or you invest in other companies in the tokenized real estate space, this is a space that you should be investing in and you should be doing more and more research about. And in the next 5 years, I think a lot more projects like this will start to come about. A lot more real estate companies will turn their business model into a tokenized real estate company because it just makes sense. It's so frictionless, so easy for people to get on their phones and invest. And hopefully the SEC will start ramping up to start cracking down on some of these bad projects out there. So if you have the money, I'd recommend getting involved in some of these projects while the prices are still super, super low. And a lot of these projects are just getting started. So thank you so much for staying till the end of the video. Please like and subscribe to my channel, and I'll see you on the next one.